Hey folks, Dan Frio here. Some breaking news on producer inflation that we're going to talk about in today's video. That is what's taking the headlines right through here. Producer inflation, we just have breaking news come in. It was flat in February. How the markets are going to react to this, well, that's what we're going to talk about in 1 second. My name is Dan Frio, where I do this report 2 times a day, where our saying is one application, one credit pool. We're going to shop your loan over 30 different lenders. Well, how do we do that? I'm not going to waste your time right now. I'm going to do that at the end of this video because we have to get to this breaking news just out from Rick Santelli. So Rick, take it away. Let us know how producer inflation went, buddy.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with February Producer Price Index, the wholesale version of inflation. On the headline, expecting up 0.3, up 0, goose egg, unched. Boy, that.
When they say flat, when you see wholesale price measures were flat in February, I thought they were, be down from where they were. They're 0. That is fantastic information. Let's keep going with him. Sorry to interrupt.
Is progress. We haven't had a number that low. Well, we equaled it in July of last year when we had another 0. To find a lower number, you're back to October of 23 at minus 0.4. Strip out the all-important food and energy. Down 1/10. Down 1/10. That's 0.4 lower than expectation.
Down 1/10. It was a negative. It's down 0.4. So if this was some other measurement on the good side, the markets would be going crazy. So concern is, if you look at what he's saying, it's nothing but good news. The markets aren't liking something about this. So let's keep going.
Down 1/10 also equals July of last year. Find a lower number, you're going back to COVID times, April of 2020. Now, let's take the ex-food, energy, and trade. That comes in at up 0.2. That's a 10th light to expectations. Up 0.2. How does that fit in? Well, that would actually be the lowest since it was up 1/10 in November of last year. All right, let's take a step back into macro. Year over year on the headline, 3.2, that's a 10th cooler than expected. 0.3 less than 3.5 in the rearview mirror. And 3.2 would be the smallest month over month since 2.9 in November of last year. Ex-food and energy year over year comes in at 3.4. 3.4, that's 1/10 lighter than expectations. 0.2 lighter than the rearview mirror. 3.4 equals where we were in November of last year. To find a lower number, you're in September of 24. And finally, the 6th part of this PPI complex comes in at ex-food, ex-energy, ex-trade. That comes in at 3.3. 3.3, that would be 1/10 lighter than expectations. 1/10 lighter than the 3.4 in the rearview mirror. And to find a lower number, you go to 3.2 in April of last year. To summarize, the market has gone down a bit in yields, but it's kind of right back where it was with respect to a 10-year at 432. That's up 1 basis point. And probably the reason is the progress on these numbers. But as I pointed out, we've kind of been there, done that with these numbers last year. So we are making progress with respect to going from the end of last year to the beginning of this year. But we're not really making progress on the big picture. But certainly inflation isn't getting worse. No doubt this is a bit cooler than expected.
Okay, so he's going to get to the unemployment claims here in a second, but you can see all the way at the top, stocks slip as traders digest new tariff threats, inflation data. So the inflation data that we got today is fantastic. So are the tariff threats and concerns and everything, is that going to take over the markets, or will this help digest, kind of cool the markets? We'll see here in a second.
And it's definitely cooler than our last look of PPI. Now, let's go to initial claims. 220,000. That's down 2,000 from a slightly revised 222. And maybe the most important area to concentrate on initial claims isn't the fact that we're still very low. The fact is that we haven't been over 250 since October 4th, the week of October 4th of last year. That is pretty interesting when you think about it. And finally, continuing claims, 1.9 million was hit the second week of this year, but we're back down again, 1,870,000. Yields haven't moved much. CPI, of course, I think yesterday didn't move much because global yields have moved higher. Boons are touching 290 today. And if you look at the spread between our yields and Bund yields, It's the tightest it's been in 20 months. That's something to pay very close attention to. 22 billion 30 years reopened will be auctioned at 1 Eastern. Becky?
Okay, so let's conclude all this stuff. And the reason being is the Federal Reserve's meeting in 6 days, and we're trying to figure out what the heck they're going to do. So go to the stock market, see the reaction here. I'll say that's flat. Okay, so you go across here, we got 0.2, 0.2, 0.3, nothing really here that's shaking the markets. 10-year Treasury's up just a tad. Here's the economic news he went through, and I want to show you how good this information's been over the last 2 days. We had consumer inflation coming. It came in down. Look at these readings. I'm going to get my head out of the way for a second. Here's the consumer inflation numbers that we had yesterday. Core CPI year over year went from 3.3 to 3.1. Okay, that beat expectations. It beat all the way across the board. Look, 3 to 2.8. It's 20 basis points. So now you go down through here and it continues. We were concerned if producer inflation's spiked, then it's only going to flow over to consumer inflation. If you have PPI numbers at 0, and then month over month, it's a negative. This couldn't be better numbers. Then we have the unemployment claims right through here. It was lower than expected. If you look at all these at face value, we have inflation that's on the consumer side is coming down. On the producer side is flat to negative. That is a nothing but good news. But you go over to here, and here's where the uncertainty comes along. If you had this news and really nothing else, you'd see the markets, the rally off of this, especially bonds. But now we're down 10 ticks. Is that going to really do anything for mortgage rates? Not really. It might push up rates, maybe this, but to 6.85 maybe. But we should be steady right in this range with all this data coming in. So once all the tariff news and everything starts to dissipate, when that would be, that could be a month, it could be a year from now. We don't know. You're going to see a lot of positive reactions in the market. So this is a long-term journey, folks, especially in real estate. And that's what we focus in on this channel because my name is Dan Frio. I'm actually a loan officer licensed in all 50 states as well as Puerto Rico. And our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? I'll get to that at the end of this video, but I want to continue just giving you more data that's really going to be affecting the markets today. So let's get over to here. This is what we've been focusing in on because we want to focus in on inflation and unemployment. These numbers kind of came in a roundabout way today and yesterday based on the CPI and the PPI. So these numbers are coming in fantastic. We're going to wait to see how the GDP comes in. That'll tell us, the state of the markets or the state of the economy, how things are going. But I thought there would be a bigger reaction. But when you see the headlines, this is kind of deceiving. Wholesale prices measure was flat. And I'm thinking, okay, it's flat. Would flat meaning didn't move? It's flat. It means 0. So couldn't really ask for better news than this today. So let's go over and recap. Mortgage rates went up a little bit yesterday. The CPI, like Rick was saying, it's basically causing flatness in the markets. We have other central banks and things like that doing things with their interest rates and their bonds. That does affect us here as well. So the inflation number on the PPI came in. That's saying, what was the Federal Reserve going to change their stance next week on if they're going to cut rates or not? Well, let's go down through here. There is a 99% chance. I'm surprised this thing isn't 100. There's a 99% chance, you can see it right over my head, that the Federal Reserve is not going to do anything because the federal funds rate right now is 4.25 to 4.5, and is expected to stay there. Let's get over to the markets. Are they doing anything? They're really not still doing anything there. Is there any major news here other than here's what causes the reactions in the market? You see, wholesale prices just came in. They were on point. Treasury yields are a little changed as investors digest the tariffs and the inflation numbers. Now you got Russia over here now starting to play hardball. All these things play a role in this stuff. And that's why I try to educate you guys every day on how to use all this data to figure out what's going on. Because if you're watching this video, you're either looking to buy a house, buy your first investment property, or maybe you're looking to refinance it since rates are down. I talked to somebody yesterday that had a 9% interest rate. So if you're over 7%, folks, please reach out to us. We'd love to help. Let's get over to the last piece of this puzzle. Who am I? And what do I do? So this piece is important because a lot of people aren't doing this. So let me explain to you. I talked to 5 people yesterday. 4 of them didn't do this. And then one after I pulled their credit, they're like, I should have listened to you. So I'll try to get a testimonial out here. But folks, this system is free. I didn't create it. It's if you want to stop trigger leads. Now, what are trigger leads? Trigger leads are when I pull your credit. You applied for a mortgage with me or any other bank. We pull your credit for a mortgage report or a car report. I don't do car loans. if you're looking for a car loan, what happens is when your credit report is pulled for either of those loan types, that data is now can be sold from the credit agencies to other financial institutions. Those are called trigger leads. Going to sell your credit, sell whatever data that they have. If you want to stop that, I did. I went to optoutprescreener.com. It's a free service. Scroll down, put in your information, and it should halt your data from being sold. Please don't hesitate, and please do that. You'll thank me in the long run. So now, who am I and what do I do? Well, my name is Dan Frio. It's intriguing where our slogan is one application, one credit pool. We're going to shop your loan over 30 different lenders or up to 30 different lenders. Now, how do we do that? Well, my bank, let's think, I work at a federal bank. I'm a loan officer here. And the cool thing is, and the reason why I'm here is we also have 30 other lenders we can use their products, their rates, their everything. Okay, so we can do all the shopping for you. Now, if you can do this on your own, please do so. I would highly suggest. We want to partner with people that truly need our help. I'm going to try to get an okay from a young man who bought a house yesterday, and he called me yesterday, and it's probably the best voicemail I've ever received from a client. You know, he bought his first house and he was just so excited. So if I can get his okay with this, I'll play his little, he left me a voicemail. It was about a minute or so long, and it's awesome. And I'd love to share it with you guys. So, but if you want to reach out to me and get some assistance, because I want to take people that don't really know what they're doing. They're like, I want to buy a house, but I don't know how to do this. Or how do I refinance? I bought my house and now I don't know how to do this. That's the people I want to partner with. Okay, so if that's you, please reach out to us. We'd love to help. Go to therateupdate.com. There's 4 different ways you can reach out to me. One, you can put in your application right through there. What I'll do is I won't pull your credit or anything. I'll just, the next day or that day, I'll call you, go over any questions that you might have. And then any questions that you should have asked, I'll go through those with you as well. And we'll put you, we'll move you forward. But if you want to schedule a consultation to just, ask questions and kick the tires, do so right there. You can put in your application, one-on-one consultation right through there. Or if you'd rather jump in the front of the line, just give us a phone call. Our phone number is 844-775-5626. Or if you want to email me directly, and I get probably 20 of these a day, and I'd love it. Please let me know your scenario. Where do you need help? Give me your contact information, your phone number. I'd love to call you, go over that question with you, and maybe there are other questions that you have, and get you on the right path, either home ownership or refinancing that house. So I'd love to work with you, but please, if you find some value in this video, all I ask you to do is subscribe down below. Give me a thumbs up to help me get noticed by more and more people, homeowners and home buyers, because I'd love to help them. So other than that, stay tuned. We will be back at the closing bell to let you know how all this mess ends for today. And then we have a live event tonight. I never did this before. I'm going to the library, a local library in my area. I live in St. Charles, Illinois, and I'm actually going to interview live at the library an incumbent mayor for our city, and just to get his word out to you guys so you can understand who he is, what he stands for. Be a little excited. It's pretty cool, and it's our first live event at a venue. So we'll see how that goes. It might be interesting. So if you're free tonight and you live in a local area and you want to see who you can vote for mayor, check it out. Other than that, folks, thanks for watching. God bless. Have a fantastic afternoon. See you here later. Bye-bye.